Trump explodes, tariffs hiked, another 10% slapped on Canada, trade talks torched, all over a 1-minute TV ad quoting Ronald Reagan. The world watched the political theater unfold. The outrage machine spun into high gear on cable news. Tweets flew from Air Force One. It was loud. It was chaotic. It was predictable. But while all cameras were pointed at that fiery spectacle, that shiny red object designed to grab your attention, the real story wasn't the noise. It was the silence. The calculated silence of Mark Carney, Canada's Prime Minister. Because while the tantrum raged, Carney wasn't scrambling to respond. He wasn't glued to Fox News. He was calmly boarding a flight, not to Washington, D.C. for damage control, but 10,000 miles away to Kuala Lumpur, Malaysia. Think about that timing. This wasn't a coincidence. This wasn't a panicked reaction. This was strategy. This was the public activation of a plan, years, perhaps decades in the making. Forget the trade spat. That's the sideshow. Today we analyze the main event, the great economic divorce. This is the story of Canada's sophisticated master plan to de-risk its future from American chaos and strategically pivot its entire economic destiny towards Asia. Deconstructing the catalyst. Chaos as leverage. Let's quickly deconstruct that catalyst, the tariff tantrum itself. Why would the President of the United States threaten to blow up a $3.6 billion a day trading relationship, his country's closest ally, over a provincial TV ad accurately quoting a beloved Republican president? Because as we explored in our previous analysis, this wasn't about trade policy. It wasn't even really about the ad itself initially. Remember, Trump initially said if he were Canada, he'd use the same ad too. Then the optics changed. He saw it air during the World Series in front of his base. It became about perceived weakness. It became about playing to the crowd. For some leaders, chaos isn't a bug in the system. It's a feature. It's leverage. It's a tool to keep allies off balance. A tool to keep the domestic base angry and energized. A tool to keep the cameras pointed firmly in one direction. The original video's analysis was spot on. This isn't about tariffs anymore. It's about chaos as leverage. But here's the critical point for today's analysis. For businesses, for farmers, for manufacturers, for anyone trying to build something real in the global economy, chaos is poison. Instability is kryptonite. You cannot build multi-billion-dollar just-in-time supply chains based on the unpredictable whims of political theater. You cannot plant next year's crops or invest in new factory equipment when the rules of trade can be rewritten by a single tweet at 2 a.m. The tariff tantrum, therefore, wasn't the cause of Canada's strategic shift. It was the final catalyst. It was the flashing red light, the blaring siren, the definitive proof that the decades-old reliance on a single, increasingly volatile partner was no longer a viable strategy. It proved that the old assumption that America, despite its flaws, was fundamentally a stable anchor, was dead. Canada realized it could no longer afford to be just the polite neighbor. It had to stop being the backup singer to America's band. It was time to take the lead vocals. The Great Divorce Thesis, the economic separation. And this brings us to the core thesis of our analysis today. The media narrative focused on the immediate drama, largely called Carney's trip to Asia a reaction, damage control, a way to show strength in the face of the tantrum. They were fundamentally wrong. This is not a reaction. This is a proactive, deliberate, long-term strategy. This is Canada initiating what can only be described as a great economic divorce from the United States. Think about it. Carney didn't scramble to organize a last-minute trip. The Kuala Lumpur summit was already on the calendar. The groundwork for deepening ties with Asia had been laid for years. The strategy wasn't invented in response to the tariff threat. It was simply accelerated by it. The tantrum provided the perfect political cover and justification for a move Canada was likely planning to make anyway, albeit perhaps more slowly. For over 70 years, Canada's default foreign and economic policy was essentially simple: align with Washington. What does Washington want? How can we maintain access to the massive U.S. market? The relationship was asymmetrical. Canada was economically tethered, politically often overshadowed. This divorce represents a fundamental shift. It's about Canada consciously, strategically diversifying away from that overwhelming 75% export dependence on a single partner. It's about rebalancing the national portfolio. It's about moving from a position of dependency to one of strategic autonomy. The new question isn't, what does Washington want? The new question is, what does Canada need, and who are the reliable global partners who can help us achieve it? This isn't about hostility, it's about prudence. It's about Canada stepping into the role identified in the original analysis, becoming the grown-up in the room on the North American continent. While American politics often seems consumed by short-term emotional cycles, Canada, under Carney, is playing the long game. They are playing geopolitical chess, or perhaps more accurately, Go, quietly placing strategic stones on the global board while the other player is busy flipping the table. The de-risking strategy, managing the breakup. So how does this divorce actually work? It starts with a core strategic objective. Publicly stated, Canada aims to double its non-U.S. exports over the next decade or so. This is a headline goal from Canada's official Indo-Pacific strategy, launched before the latest tariff drama. Let's be clear for our audience in finance and trade. This isn't just about chasing growth numbers. This is fundamentally about diversification and resilience. It's portfolio management 101 applied at the national level. You don't put 75% of your retirement savings into a single volatile stock, no matter how big it is. Carney is diversifying Canada's national economic portfolio away from over-reliance on the U.S. market. Why is this necessary? Because that reliance created profound vulnerabilities. Think about the key Canadian industries: automotive, agriculture, softwood lumber, aluminum and steel, energy. These sectors are deeply integrated with the U.S. economy through the USMCA, the successor to NAFTA. And time and again, they become political footballs. Every dispute, whether legitimate or manufactured for domestic political gain in the U.S., holds these critical Canadian industries hostage. Remember the softwood lumber dispute? Decades long. The constant battles over dairy quotas? The steel and aluminum tariffs imposed on national security grounds against Canada. Each instance highlights the danger of having one dominant partner who can weaponize trade access at will. This dependency creates an unacceptable level of economic vulnerability, especially when that partner exhibits increasing unpredictability. Now let's clarify a crucial term for our professional audience. This strategy is better described as de-risking, not necessarily decoupling. A full decoupling from the U.S. economy is neither feasible nor desirable. The integration is too deep, the geography too intertwined. But de-risking is about reducing the leverage that the U.S. holds over Canada. It's about building options. It's about creating alternative markets and supply chains so that Canada isn't forced to concede on unrelated issues simply to maintain access to the U.S. market. It's about ensuring that the next time Washington sneezes, politically or economically, Canada has built up enough economic immunity that it doesn't automatically catch a crippling cold. It's about moving from a relationship of dependence to one of interdependence, where both partners have options and leverage is more balanced. That is the strategic heart of the de-risking approach. The pivot to Asia, finding new partners. If you're de-risking from the U.S., where do you turn? For Canada, the answer is clear and has been signaled for years: Asia, specifically the dynamic economies of the Indo-Pacific. Mark Carney's presence in Kuala Lumpur during the tariff meltdown wasn't just symbolic, it was the embodiment of this pivot. Why Kuala Lumpur? Malaysia is a key player in ASEAN, Association of Southeast Asian Nations, a bloc of 10 countries with a combined GDP rivaling major economies and some of the fastest growth rates on the planet. Carney wasn't there to talk about Trump. He was there to deliver a very specific, carefully crafted message to 11 Asia-Pacific nations. As highlighted in the original video, Canada is a reliable partner. Canada honors commitments. Canada respects trade. Canada believes in the rule of law. Every single phrase was a deliberate contrast to the perceived chaos emanating from Washington. He was selling stability. He was selling predictability. He was selling Canada as the safe harbor in a volatile global trade environment. While America was seen closing doors with tariffs and tantrums, Carney was explicitly opening Canada's doors, positioning it as the dependable alternative. But this pivot isn't just rhetoric. It's built on a solid legal and economic foundation. The cornerstone is the CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. Remember, this was the successor to the TPP, the massive trade deal the United States championed and then abruptly abandoned. Canada, along with Japan, Australia, and others, stayed the course. They salvaged the deal. Why is the CPTPP so crucial? Because it provides Canada with preferential, high-standard trade access to a vast market of 600 million consumers across the Pacific, including major economies like Japan, Australia, Vietnam, Singapore, and Malaysia. It sets advanced rules for digital trade, intellectual property, and labor standards, locking in access and predictability without relying on Washington's approval. The CPTPP is the legal and economic architecture that makes the pivot to Asia credible. It's the framework for building new supply chains and customer bases outside the U.S. orbit. Beyond the CPTPP, Canada is aggressively pursuing bilateral deals within the region. Negotiations for a comprehensive Canada-ASEAN Free Trade Agreement are ongoing. A specific Comprehensive Economic Partnership Agreement, CEPA, with Indonesia, Southeast Asia's largest economy with 270 million people, is a top priority. Indonesia is critical for resources, particularly nickel, for the EV battery supply chain. Vietnam, already Canada's largest trading partner in ASEAN, thanks in part to the CPTPP, remains a key focus for supply chain diversification, especially in manufacturing. Deals are also being pursued with the Philippines and other fast-growing economies in the region. This isn't just about signing ceremonies. This is about the painstaking work of building new relationships, aligning regulations, and physically constructing the logistics networks, the ports, the shipping routes, the digital infrastructure needed to redirect trade flows. While Trump was fighting 20th century battles over tariffs on steel, Carney was methodically laying the groundwork for Canada to win in the 21st century Asian market. A new sovereignty, building the foundation, but a successful strategic pivot, a true economic divorce, requires more than just new trade deals. It requires building the domestic foundations of sovereignty and resilience. You can't just redirect trade, you need the capacity to support it and the security to protect it. This is where Canada's less discussed domestic investments come into play, forming the crucial third leg of this strategy. Consider Canada's ambitious pan-Canadian artificial intelligence strategy. It was the first country in the world to announce such a national strategy, investing heavily in AI research hubs in Edmonton, Toronto, and Montreal. Why AI? Because Canada understands that future economic competitiveness and national security will depend heavily on leadership in artificial intelligence, from optimizing supply chains to defending critical infrastructure. Alongside AI, there's a major focus on cybersecurity. Canada's national cybersecurity strategy involves significant investments in protecting government systems, partnering with the private sector, and developing a skilled cyber workforce. In an era of digital trade and geopolitical tension, securing data and networks is paramount to economic sovereignty. Then there's the clean energy transition. Canada is leveraging its vast natural resources not just for traditional energy, but positioning itself as a leader in clean technologies, hydrogen, carbon capture, critical minerals for batteries, sustainable forestry, and hydropower. Deals like the clean energy partnerships mentioned in the original analysis are not isolated initiatives. They are part of a broader strategy to power the future economy and provide energy security independent of volatile global fossil fuel markets. And finally, defense modernization. The original analysis mentioned quadrupling defense spending. While the exact multiple might be debated, the trend is clear. Canada is significantly increasing investment, aiming to meet its NATO commitments of approaching 2% of GDP. Crucially, this isn't just about traditional military hardware. It includes major investments in NORAD modernization, often alongside the US, ironically, Arctic surveillance, and again, cyber capabilities. Why the Arctic? Look at a map. As climate change opens up the Northwest Passage, the Arctic becomes a new strategic frontier for trade and security. Canada is asserting its sovereignty and investing in the infrastructure to monitor and potentially utilize these emerging routes, further diversifying its options beyond traditional North American corridors. Put all these pieces together: AI leadership, cyber resilience, clean energy independence, and modernized defense with an Arctic focus. And you see the domestic architecture being built to support the great economic divorce. This isn't just about escaping U.S. chaos. It's about building a uniquely Canadian model of 21st century sovereignty. This brings us back to the powerful insight from the original analysis. Canada is becoming the anchor of the West. In a world increasingly defined by geopolitical rivalry and economic volatility, stability itself has become a strategic asset. Reliability is the new currency. As global investors and businesses look for safe harbors, the boring democracy with functioning institutions starts to look incredibly attractive. Canada's brand is shifting from polite neighbor to stable global partner. So let's bring it all together. While the political theater in Washington continues to generate headlines, the real story, the one with long-term global consequences, is the quiet strategic repositioning of Canada. This is the great economic divorce. It's not driven by animosity, but by necessity. It's a calculated move away from overdependence on a single, unpredictable partner. It's a sophisticated pivot toward the dynamic growth centers of Asia, underpinned by strategic investments in future-proof domestic industries. It's Mark Carney playing the long game, positioning Canada not just to survive the current geopolitical turbulence, but to thrive in the decades to come as the reliable, stable anchor in a chaotic world. But this entire strategic pivot, this necessity to de-risk and look elsewhere, it's only happening because of the deep, systemic instability brewing south of the border. The chaos isn't just political, it's economic and social. To truly understand the fire that Mark Carney is strategically running from, watch our previous video analyzing the collapse of the American social safety net and the shocking rise of medical bankruptcy. Understanding that internal U.S. reality is crucial context for grasping the magnitude of Canada's external shift. Now, I want to turn this over to you, especially the professionals in our audience. If you're involved in logistics, agriculture, manufacturing, finance, or policy, are you seeing this shift on the ground? Are you or your clients actively trying to de-risk your supply chains and business models from U.S. volatility? What does this pivot actually look like in your industry? What are the challenges and opportunities? Share your professional insights and strategies in the comments below. Let's discuss the real-world implications of this great economic divorce.